Hey guys, thanks for joining me on this short video about finance. And today I'm welcomed with my great friend Steve Greenwood from Capita Finance. Steve, welcome.
Welcome. Thanks, Rob. It's great to be here.
Yeah, no, it's good. Thanks for taking time out. I know you're busy now. A lot of people doing stuff with loans and stuff. Today I
Yeah.
want to just ask you some queries and questions, basically from three different perspectives. So one would be, and I'll just get you to give us a general update what's happening in finance, but also if someone's planning to be in their home for the next 5 to 10 years, what kind of rates should they think about refinancing? What kind of rates are available? Also, there are a few people out there looking to get into the investment category of the market. What should they be doing? What kind of loans are appropriate for them? And then thirdly, people looking to obviously purchase property at the moment. That could be first home buyers, and they're probably in one category, and then maybe second homes or such. And we can talk a little bit about that, if that's okay.
Yep. All good.
What's happening in the world of finance? How are banks going at the moment?
Certain banks are keeping up with the level of applications. Other banks have fallen way behind.
Yeah,
I
I've
think
heard
in the
that.
last few months we've had banks going out to 39 days for assessment,
Yeah,
39 working days, which
yeah,
is almost 8 weeks for them to actually pick up a file. So
wow.
it's got to a bit of a crazy stage there.
Yeah. And
Other
so
banks are
guys,
picking up
for those
files.
of you just watching, 39 days, and that's working days, months and months pre-COVID, you could get that sorted within, a few days to 10 to 14 days. So now it's blown out to
Yeah,
39 days. So
yeah,
when you are out there doing things in the finance world, patience is a virtue.
yeah. And what I'm saying to agents and clients is, set your expectations. You really got to be looking at the bank and setting your expectations as far as finance approval is concerned, because it can
Yeah.
be taking that length of time,
And
especially to get the
probably
better rates.
from your perspective, there are, as a broker, you've got a panel of lenders that
Yeah.
you're looking at. And so you can
Well,
probably steer people to
yeah,
different.
we can find the lenders that are, there are lenders that are picking up files within 2 hours. So
Yeah,
you're
perfect.
going from 2 hours to 39 days. So you can understand the frustration of some clients. They've got their friends that have got a loan that basically they've got approval within a week,
Yeah,
and then they're looking at 8 weeks to get their loans through. So
yeah,
it's
that's right.
and that's another reason to use a broker, is the
Yeah,
broker knows what's happening out in the market. So
yeah. And
and
it's
we'll,
not that a
we'll
broker pitches one bank against the other, but the broker's job is to look at the whole portfolio of who's doing the lending and connect you as the purchaser or the person looking to get another loan or refinance or whatever, get you to the right bank with the right product at the right rate. What is happening with rates generally?
um as far as variable rates, you're looking around about the 3% mark.
Yep.
So a lot of difference to what it was even like 2-3 years ago when it was up to 6-7%.
Yes.
Fixed rates are I'm not normally a big fan of fixed rates,
Okay.
but it can be a really good time to fix a loan in at the moment.
Yep.
You're looking at rates of in the low twos. So
And are we
um,
still getting products where you can fix the part of the loan and then the other is on
yeah,
the variable? Yeah.
Yeah, exactly. So you can hedge your bets. You can have a bit fixed and a bit variable.
Yep.
The advantage with variable is you keep the redraw available on the variable side.
Yep.
So you're making your exact repayments on the fixed side. Any extra you're putting into the variable side,
Yep.
and also offset accounts are very, very popular at the moment,
Right.
because people, you can get on a term deposit, you're lucky if you're getting 0.5% at the moment.
Yeah, that's
But if
right.
you're putting it into an offset account, you're getting the interest rate of the day. So it can be
You,
like
you and I are
3% on
that
your offset.
old that we remember back in school, they were saying, yes, just put your money in a term deposit. You'll get at least 5%. And
Yeah,
those
yeah,
days are really, really gone for sure. Let's
yeah,
take it a little bit more specifically. So let's be thinking about someone watching this video. They already are in their home. They're not planning to buy or anything, but it's been probably 4 or 5 years since they've had their loan assessed and had a mortgage health check. And they could be
yeah,
on even 5, 6, 7% if they haven't looked for a little
yeah.
while. What would you recommend for them to do?
Oh, it's just give me a call, give a broker a call myself, and just have a chat.
Beautiful.
And yeah, and my number is 0403 012 036. So yeah,
Beautiful.
just give me a call anytime, and yeah, we can have a chat about what's available out there,
Yeah.
and it could save thousands. And that's yeah, and the bank won't tell you that you're on a higher rate than you need to be.
And I think if we're real honest, the banks are in the business of selling money. And so like anyone, like someone selling a home, they want to get as much as they possibly
Yep,
can. And
yep,
obviously you getting a home loan, you'd like to get the lowest rate. And that's where Steve comes
yep.
in helping you achieve that. Um,
And
let's,
my other, I'll just interrupt you a
yeah,
second
that's
there.
right.
My other saying is, to a bank you're a number, to a broker you're a name and a
Yeah,
person,
I
and
love it.
that's
I love it.
that's never been more true than it is today.
Guys, and the reason I'm interviewing with Steve today is because I have worked with him probably for the last 3 or 4 years, and I know how personally he takes each client's needs and looks at their situations, and you won't find somebody that is more ethical and honest in the dealings that they have with their clients. So, Steve, I want to ask you, if people are considering buying an investment property, in fact, I've talked to several people just casually and socially over the last couple of weeks, where people now, through COVID or whatnot, they've been really assessing where they're at in life and what the next stage might look like. And they are aware that property prices are quite reasonable compared to what they have been in years gone past. If someone's looking to invest, talk us a little bit about that. What kind of deposits they might need? Is interest only still the goal that used to be talked about, or the different products? What do they need to know?
As far as deposits concerned, if you have equity in your existing home, then you can do it without a deposit,
Yeah.
and that can cover the cost to actually purchase a house as well.
Yep.
And that's all. As far as they'd have to check with an accountant, but as far as it goes, that would be tax deductible.
Yep.
Um,
We're not giving
and
tax advice. Time out. We're not giving tax advice. Go
no,
see your tax professional.
absolutely no tax advice, but obviously speak to your tax
Yeah.
agent and whatever. But that's a viable option. Um, Rates again, very low rates with investment. You're looking less than 3% for fixed, and around about 3.5% for
Very.
variable.
Yep. And when
Again, you
we're
can use
saying
an off.
fixed, what's the time frame that we're thinking about?
Um, Anywhere from 2 to 5 years.
Okay. Yep.
Um, Really, the better rates are in the 2 to 3 year range,
Yep.
and they are in the mid twos for investment, low twos for owner occupied. Yeah, so 2 to 3 years is probably what I'd be looking at.
Yep.
And obviously, at the end of the 3 years, it's a time to actually reassess then and maybe fix again or go on to a better variable rate. Or we don't know what's going to be happening in 3 years' time, but at least you have the certainty of repayments
Yeah, I
for
was
three
talking to
years.
someone in America. For those that don't know me or haven't, I'm an American living in Australia for the last 20 years. Was chatting to somebody yesterday, and they were saying that there are some lenders in the States that are sub 2% fixed for 10 years.
Ugh,
And so what it says from a banking perspective is that there's not a lot of confidence that things are going to get strong.
no, no.
So
It's yeah, I can't see interest rates shifting too much for the foreseeable future, and with
okay,
the Reserve Bank rate of 0.5%,
yeah, yeah.
there isn't really much to go downwards either. So
And what about, in the old days, people were doing a lot of interest only loans. Is that still the go for investment, or is that an option?
it is,
Or
it is an option, but you are going to be paying higher interest rates for an interest only loan now.
okay,
And interest rates probably around about a 0.5% on top
okay,
for interest only.
yeah,
And again, I can give a quote on interest only and principal and interest.
right,
Obviously, there is tax advantages for having an interest only loan, but
right,
again, speak to a tax agent.
yeah.
But more and more people are looking towards the principal and interest and actually starting to pay off some of the principal now. So
Yeah, I think
uh,
there's a few people our age that might have invested earlier on that were principal and interest for a long period of time. And as prices have gone in through that negative growth cycle here in WA, they're now realizing, yeah, I was paying interest only. However, the property is worth less than what I paid for it. So I'm a little bit in that negative equity space. And yeah, so they'll be looking to do something for sure.
And people have got to bear in mind with interest only, this is a really important point. If you have a 5-year interest only loan, your repayments after the 5 years are based on a 25-year term.
Right.
So your repayments would be higher than on a standard 30-year term from day one. And so that can make a lot of difference.
If someone wanted to get out of that interest only loan, there'd be some kind of a penalty with most lenders, wouldn't there?
No, not really. You're only really looking at the discharge. Discharge. It's really fixed loans. If people are getting out of the fixed loans, that's where a penalty will apply.
Okay.
Generally, that's not a significant amount at the moment because interest rates are so low. So
yeah, no, that's good. I know when I first got into real estate, there was electricity, but it wasn't in every suburb. They were raving about how low the interest rates were. They were all the way down to 8%. And now we're talking, 5-6% less than that. So it's really affordable for lending. I wanted to get into maybe a main category. People looking to buy a property. Now, these could be people that are first home buyers, and there's been a lot of information about that in the news, whether they be building, whether they be buying established, and also people that are just in a normal course of having to buy another property. Their property is too big, too small. Maybe COVID's made them realize that their property is way too small to hang out with each other, and they need to get a bigger property. What's the go with that at the moment? What's the process that they need to be aware of? What's on offer?
As far as buying an established property at the moment, there isn't really many incentives from the government. So obviously the building, the property incentives are pretty well known.
Yep. That's again for first home buyers.
First home buyers, there isn't any stamp duty up to 430,000.
Yep.
So that can be a saving of up to around about 12,000.
Wow, good.
First home buyers, the advantage of buying an established is really they're moving straight into the house. They don't have to rent somewhere for 6 months or live with mum and dad for 6 months and drive mum and dad crazy and
strain that relationship.
Yeah, so it's they've got to weigh up the pros and cons, but obviously big incentives from the government at the moment to build. So that is
Anecdotally, people are telling me that miraculously, as the government incentives came in, the cost of building went up by approximately the same amount.
Exactly. And I look at it another way. These incentives are not just for first-time buyers. So you do have established people that are in their house at the moment. They're going to want to sell their property to build.
Yep.
So these properties will be coming on the market as well. So it's not purely an incentive for building. Yep. There is an incentive for the established market as well.
Yeah,
you just got to see beyond the square.
Well, that's good, and that's why someone that is going about their work, they're not in the real estate space, they're not in the finance space. They can watch a small little video program like this, and they can get those ideas that, hey, it is worth me talking to either a real estate professional or to a finance professional to find out what the best scenarios are right now. And I think that's really cool. And so with a first home buyer wanting to get a loan, what are the criteria they need to meet? How much deposit do they need to have, and those kind of things?
Generally 5%.
Okay.
Although you do have the government lender called Keystart, which is a 2% deposit.
Okay.
The 5% with the banks has to be genuine savings.
Okay.
So saved up over a period of 3 months.
Right.
They'd want to see statements, so it can be saved up.
And just to break it down even more practically, so you've got Bill and Sally, they're first home buyers. They've been putting money away for maybe 6 months, 8 months, and they can show some genuine savings through statements where they want to buy something at $300,000. That would equate 5%. They've got to have $15,000 in savings. And what other factors would come into play there? What about credit card scenarios and car payments and those things that everybody seems to have through the normal course of living?
So with credit cards, personal loans, they do affect the amount that you can borrow.
Okay.
Lenders, they basically encourage credit cards. They want people to have credit cards and personal loans or whatever.
Yeah.
So they're not going to discourage people that have maybe one credit card and one personal loan.
Yeah.
But it does affect their borrowing capacity.
Right.
The other thing as well is monthly living expenses.
Right.
We have to do a complete assessment of the client's monthly living expenses to go through their statements to make sure that they don't have significant expenses other than the standard living expenses.
I know we've chatted before that some banks are really examining living expenses very closely, even to the point of them wanting to know what was this ATM withdrawal for. So people, I suppose, getting a loan at the moment need to be prepared for a little bit more scrutiny than in years gone past, where it was kind of a looking at a few things and ticking a box and off you go.
Yeah, no, they want to see statements. They want to see what you're spending your money on. The reason for that is obviously after the loan is settled, they want to make sure you've got the capacity to make the repayments on the mortgage. Now, obviously, if you have expenses that are one-offs, or that you can actually cut those expenses out after you actually own a house. So say you're living with mum and dad and you're going out for a lot of takeaways because you want to get away from mum and dad.
Yeah.
And when you're in your own house, you're going to cook your own food and whatever, and you're happy doing that.
2-minute noodles.
Yep. So we can make notes with regard to that. So it's not always a complete, because you're spending like, I don't know, $100 a week in McDonald's or whatever. It's that doesn't necessarily discount you from actually getting a home loan because your expenses are too high. So,
but if you're every night at the bottle shop and the weekends at Crown every night or every weekend,
I think that you might be pushing it a little bit then. And ATMs at Crown are probably a big red flag for the bank.
$1,000, $2,000 coming out.
Yeah.
So what you're
big
saying is
flags.
that people's behavior is being analyzed a little bit more, and it's because the banks are very risk averse at the moment, and it's obviously within the bank's interest to have a very clean portfolio. For those of you that don't realize, the banks actually borrow money from other sources, whether it be their own deposit holders or overseas institutions. They borrow that money at this percentage, and then they on-sell it to you at a higher percentage, and the margin is where they make their money. So if they have less risky clients, then it's they can get the money cheaper.
And the other thing to take into account is all brokers now are going towards a best interest duty regulations, which are effectively going to be, we have to actually show you what's actually available out there, give you a comparison between a certain amount of lenders. I generally give a comparison between 5 lenders. So, and you can actually look through all those loans and actually come up with the one you actually prefer. So it's actually always in the client's best interest.
I think that's great that we've got that disclosure. I know there were, in years gone past, both with banks and with brokers, I suppose there was a little bit of smoke and mirrors where people weren't 100% clear whose best interest they were working for. And I know working with you for the last few years, you're always trying to make sure that you're getting a good rate, but there's also a good balance to what that product offers.
Yeah, I've always worked in the best interest of the clients from day one. So it's what I continue to do now. So
that's
so
really
it doesn't really make it much changes to me apart from more paperwork. But
So,
Yes.
Steve, let me ask you this, and this might be the last thing that we talk about on this particular video. We'd love to get you back and chat again on other things. So we've got Mildred and John, and they're wanting to downsize, but they will need a little bit of a mortgage. They're probably in their mid-50s, and they want to go out and start looking at options. What process would you recommend to them? As a real estate agent, I always think, well, you should actually figure out how much you're going to get for your house and have some kind of a variance because the market's not 100% stable. Then, and get pre-approved as well. Talk us through that process. What would they need to do?
So they'd come in, have a chat with me. I would actually normally go out to see them, or they can come into the office,
Yep.
whichever's easier for them. We'd have a chat, go through what we've discussed previously, living expenses, the loans that are available to them. They'd probably look, if they're sort of looking at downsizing, getting towards retirement age, they might be looking at shortening the loan term to actually make sure the loan is paid off close to retirement, or that they have an end strategy, an exit strategy at the end of that, at retirement. So, and that's pretty much so long as they've got equity, they're coming out of their existing house with equity. Small loans, I know shouldn't be a problem, even over a 5 or 10 year loan term.
Yeah, okay.
It's just having that exit strategy in place.
I know. It seems to me I hear a few horror stories from time to time where people have just sat in the mortgage that they've got for a while, so they're paying over the percentage that they should, so they haven't actually looked at refinancing. Which, guys, if you are in that situation, please contact Steve. I'll make sure that his details are attached to this video. Please contact Steve to make sure that you've got the lowest rate that is good for you, because no need to pay more than what you need to pay. And also some horror stories where people are getting to that, maybe 5-10 years out of retirement, or even closer. They purchased the home maybe in a second relationship scenario 5 years ago. The home was worth less than what they owe. So we really want to be cautious in giving you good advice on how to go forward with your life, because nobody wants to be working until they're 900 years old just to pay off a mortgage.
Exactly.
And we want to have some peace of mind going forward. Steve, any final comments about just the overall finance sector and where you see it moving between now and Christmas?
I think it's going to be pretty stable between now and Christmas. I think lenders are keen to lend, but they are looking very carefully into the client's spending habits, and they're a little bit risk averse. If it's going above 80%, the mortgage insurers are even more risk averse. So that's sort of where we're at the moment.
So if someone's got a 20% deposit, a genuine 20% deposit, they are still able to be looking at that without mortgage insurance.
That's correct. Yeah. So just so people know, mortgage insurance is a cost that's added on to the loan.
Right.
It can be at 95%. It can be quite a prohibitive amount. So it's well worth taking that into account.
So if, just off the top of your head, if someone's borrowing 300, let's say, and they need mortgage insurance, how much is that going to add to the loan?
At 95%, around about 12,000.
Yeah.
And that is added on to the loan. You're paying that back over 30 years.
Yeah.
So that can be a cost. Many times that. So it can be up to 100,000. It's actually costing them over that time. So it's it's prohibitively expensive.
Yeah.
Long words.
Yeah, no, it is. And the reality is that if you're in that zone where you need to refinance, maybe you want to invest, or you're looking to purchase either your first home or a second home, come and speak to us, guys. We want to make sure that we guide you in the right direction. Whether or not we do business with you or you choose to do business with us, that's fine. That's completely up to yourselves. But we want to be providing you the information so that you can make absolutely great solid decisions moving forward. Steve, just give us your phone number one more time.
Yeah, so it's 0403 012 036.
Beautiful.
And the email is sgreenwood@capitafinance.com.au. That's Capita without the L in there, as Rob found out before.
As I found out, I sent him an email the other day and it bounced back. But that's all right. If you get it right, it went straight through on the second time. Guys, thanks for watching this little video. Steve, I hope you'll come back and talk to us a little bit more about
anytime, Rob.
And we'll just keep you up to date, guys. Thanks for watching.
Okay, thanks, Rob.